Welcome back to the channel, guys. I'm your host, Buckning, and today we are going to give you an update on the portfolio at the beginning of the week. And then we're going to talk about the infinite money glitch in real life. No, I'm not going to sell you courses, and no, I'm not going to try to schmooze you into buying something. This is total just theory, knowledge, math, and what I've learned in, I guess, the financial world. So, before we get into that part, we will give you guys an update on the portfolio. But if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. And so we will get right into it here. Portfolio today closing out at $5,578.69, up $2.55, up 0.05%. For the 1 week, we are down $12.87, down 0.23%. For the 1 month, we're up $100.12, up 1.83%. For the 3 months, we're up $302.71, up 5.74%. For the 1 year, we're up $908.69, up 19.46%. And again, for all. Starting off with our first position, which is Bell Canada, also known as BCE Inc., ticker symbol BCE, closing out at $61.20, down 2 cents on the day. Here is the snapshot of the position there. And if you need to pause and check out the position, then go right ahead. And again, that is Bell Canada, ticker symbol BCE. Next position we have here is Bank of Montreal, ticker symbol BMO. Closing out at $128.12, up 7 cents on the day, up 0.05%. Here's the snapshot of the position there. And again, that is Bank of Montreal, ticker symbol BMO. Next position we have here is Bank of Nova Scotia, closing out at $79.63, down 0.22 cents, 22 cents, down 0.28%. Here is the snapshot of the position here. And again, that is Bank of Nova Scotia, ticker symbol BNS. Next position we have here is Cisco, ticker symbol CSCO, closing out at $53.26 USD, up 8 cents on the day, up 0.15%. This is our newest position, and the position will be updating this Friday. So stay tuned for that, because we'll update the dividend tracker as well for this one. So again, here's the snapshot of the position. And again, that is Cisco, ticker symbol CSCO. Next position we have here is Loblaw's Companies, Loblaw Co's Ltd. Did they have a name change or something I didn't know about? Ticker symbol L, closing out at $75.73, up 55 cents on the day, up 0.73%. Here is the snapshot of the position here. And again, that is Loblaw's, ticker symbol L. Next position we have here is Manulife Financial Corporation, ticker symbol MFC, closing out at $23.90, down 20 cents on the day, down 0.83%. Here is the snapshot of the position here. And again, that is Manulife Financial Corporation, ticker symbol MFC. Next position we have is Qualcomm, ticker symbol QCOM, closing out at $135.08, up $1.12 on the day, up 0.84%. And sorry, this one is in US, $135.08 US. Here is the snapshot of the position here. And again, that is Qualcomm, ticker symbol QCOM. Next position we have here is Royal Bank of Canada, ticker symbol RY, closing out at $125.84, down 42 cents on the day, down 0.33%. Here is the snapshot of the position here. And again, that is Royal Bank of Canada, ticker symbol RY. Next position we have here is TELUS Corporation, ticker symbol T, closing out at $27.80, up 7 cents on the day, up 0.25%. Here is the snapshot of the position here. And again, that is TELUS Corporation, ticker symbol T. Last position here we have is Toronto Dominion Bank, closing out at $87.12, down 44 cents on the day, down 0.5%. Here is the snapshot of the position. And again, that is Toronto Dominion Bank, ticker symbol TD. Here's the cash count of $145.09. Just as always, every week I like to show the proof, so I'll put it right up here. That we put $100 every single week to build a dividend portfolio right in front of your eyes in a tax-free savings account. The words got mixed up there. It's not as usual, and it's okay. Here is the watch list for now. These are probably positions I want to add in the future. I'm sure you guys know that, but we'll head back to the top and just show you guys the all. And we are going to talk about the infinite money glitch. So there's this theory out there that for retirement and that you need about 25 to 30 times your income, whatever it is. I'm just going to use averages and show you how, if you're in retirement or even retire a bit early, and I did this in a calculator and I got all the calculations, and I'll show you how you can, in this example, it's going to be starting really early at 18 years old. So if you know an 18-year-old, go and show them this video, share this video with them, leave a like, because it actually makes sense if you do the calculations and how actually simple it can actually be to be a millionaire. And I know that doesn't equate to much, but I'm not just talking about 1 million. I'm talking maybe a few multi-millions. And again, this is just for entertainment purposes only. And I put in the numbers and it totally makes sense for the infinite money glitch. So the infinite money glitch is the theory that you can take whatever average income you need for the year to live that you desire, whatever that number is, you set it, and you times by 25, anywhere between the 25 to 30 number. And that is how much you need invested in order to pull 4% every single year and essentially never touch the principal and let that principal continue to grow as you draw 4% every single year. Now that is the 4% rule. I'm just going to call it the infinite money glitch because it sounds so much cooler. And so, yeah, we'll just talk about that. So you have the ability, once you have 25 to 30 times the amount that you need per year of your salary, whatever it is, you can draw 4% and continue to live off of that for the rest of your life and still have your investments grow and never touch the principal. Now, we are taking averages into this. These are not absolute numbers, and I'll go through that with you now. Okay, so here's the calculator. And we are going to go with 18 years old. We're going to start there. And the annualized return will be 10% based on the S&P 500, because we're going to go off of that because everyone should have an S&P 500. That's not financial advice. That is just what I've learned. Okay, this is for entertainment purposes only. Retirement age, we're going to put 45 just because I can. And then an annualized returns during retirement. For that calculation, we're going to put 10% because it's 10% on average per year with the S&P 500 for the last 100 years. Okay. Current savings, 0 because you're 18 years old. What age do you expect to live? I put 82 because that is the average age life expectancy of a Canadian. Annual savings is about 10% because we always try to go with 10% rule based on you being over the poverty line. Excuse me. Inflation rate, 2%. Increase of annual savings, we put nothing there. Annual income, I took the average of Canadians, which is $55,000 per year. And the income that we want in retirement is close to that 55,000, so you continue to live the way you want to live. Unless you want more, then you're going to have to save a bit more aggressively or just work a bit longer, maybe a couple years, few years, so on and so forth. Excuse me. So the calculator works as so. 18 years old, you have no savings, no growth, but you put away $5,500. You turn 19 years old, you have currently $5,500 in savings, and you can break that up monthly as well if you want. But on 10% average on the S&P 500, you will save $550. Or not save, you will grow $550 and you'll save another $5,500, which brings your end balance to $11,550. And you repeat this process year over year as you continue to work or put more, whatever it is, but let's just go with an absolute number just to make it easier. as you can see, the end balance at every single year when you're 20 is 18,205. At 21, 25,000. At 22, 33,000. As you can see, the numbers in the growth are getting larger and larger and larger. Okay, so as we go down, we're going to go right to 45. This is where, put it right at the top. You can pause the video if you want to see the numbers. I'll try and make it as smooth as possible, but we'll go to 45 here. Okay, remember how 45 I put as the age of retirement. You currently have saved $666,000 roughly, and the growth in that year will be about 66,000 based on the 10% return per year on average in the S&P. And yes, sometimes it doesn't do 10% in 1 year, sometimes it does 2, but on average, we are doing averages, and you save another $5,500. The end balance will be $738,000 at the end of it, okay? At 46, this is when we start taking money out. Okay, at 46, you should have $738,000 roughly, and you take out $47,878 to live off of for the year, and the growth should be about $73,817, and the end balance is $764,000. Okay, if we go back up, that number at 46 is still higher than number 45 at age 45, but you took out $47,000, which is close to the annual income you were making while working. Okay. The cool thing is, as we keep on going, as you withdraw at 47, 48, 49, do you see how these numbers are getting bigger? And it's getting bigger because we are taking a set percentage amount out of the account, out of the investment account for living to live off of for the year. And if you take correlation at the end balance seems to keep on growing because you're taking what you need and leaving what you don't need to continue to grow at that 10% average rate of return. And by 53, you'll have $1 million. Okay. And at $1 million, you can take out $56,000, which is higher than the average, the salary you were making at 55 as a Canadian average, 55K. And every single year you give yourself a little bit of a raise, just like a job would slowly give you a raise, and your investments are growing continually. Okay. We are going right to 82. So if you just want to look at this, so the withdrawn number is on the right of the side, on the right side, and the saving amount is on the left side, just so you know. So you're wondering how that number came upon. Okay. At 65, which is now, I guess, the retirement age for people. The average retirement age is like 61 in Canada. But at 65, everyone talks about it. You will have $1.8 million if you keep doing what you're doing, never have to save again, and you get to pull out $69,000, okay? And so on and so forth. By 82, your last year of life, unless you live longer than that, you will be able to pull out $97,000 and still have $6 million at retirement. At 82, sorry. At the end balance, you have $6 million. So here is the greatest thing about this. Because you are working in your prime years at like 30 to 40, in those years, you will still be able to accumulate assets, do your hustles, if that's what they call them, build side income, whatever it is that you want to do. And you continue to do that, keep adding to this, and it can be in a tax REIT, it can be an RSP, it can be whatever. Obviously, there's limitations, so go seek a professional for that advice. But this is what you'll have at the end of it. Okay, you'll have $6 million at 82, and you still were able to have your annual salary that you had while working. Now, if we change a few things, now let's say you don't want to retire at 45, you want to retire at 50. Okay, we'll regenerate the number here, and boom, you'll have 13 million at 82. Okay, now let's just do 55. You work out for a few years longer, just because it used to be, retire 55 or whatever it is that they used to have the audacity to put on TV, and you generate that, and you have $17 million at a 10% return annualized per year. Okay, now let's just say it's Now it's 65 roughly. So we'll go 65. And let's just go a bit conservative. Let's say the market doesn't do that. Let's just say it's 8%. Okay. You will still have $7 million as an annualized return on this. So this is the most amazing thing about compounding and being able to live off what you want to live off and be a multimillionaire by the time you're 82, or where is it? You'll be a millionaire by the time you're 53. And then you'll be a multimillionaire, which is multiple millions, by 61 in 10 years. Okay. But you don't have to retire at 65. You can retire at 45, generate, and boom, you're not going to have enough. So that would be based off of 10% return because it's a negative number at the bottom. Boom, there you go. Okay. So 1 to 2% does make a huge difference, just so you know. But that is the amazing thing about the infinite money glitch, because you never actually run out of money. As you can see here in the example of 10% annualized return at 45 years old, boom, here it is when you start at 46, when you start retiring, the end balance of your portfolio continues to grow and you don't have to work for the money anymore. You can choose to, which I probably will, and you still end up with $6 million at 82 years old. Now, when I'm 82, I hope to be driving a Lambo and, you know, driving at fast speeds and my dentures flying out of my mouth. So, and by that time, I hope to have multiple properties and giant businesses and a giant portfolio. That is the calculator, guys. This is the infinite money glitch, apparently. And I'm going to test it out in real life. And I'll let you know in 5 to 10 years, or maybe more, if it actually works, to give you a real life example. But I'm pretty sure there's people that actually have done it. Other than that, guys, hopefully you did enjoy the video. Looks like my Wealthsimple app closed, but hopefully you guys did enjoy the video. I'm not a financial advisor. Just remember, I'm definitely not your financial advisor. Hopefully you guys did enjoy the video and share this with those that are maybe younger, because it's huge. It's amazing. Who doesn't want to be able to do this kind of stuff, right? Excuse me, if that makes sense. So other than that, guys, have a great week and we'll see you in the next one. Bye.